Mortgage rates are still a hot topic, and for good reason. After the most recent job reports came out weaker than expected, the bond market reacted almost instantly. And as a result, in early August, mortgage rates dropped to their lowest point so far this year, which was around 6.5%. While that may not sound like a big deal, pretty much every buyer has been waiting for rates to fall. And even a seemingly small drop like that reignites the hope that we're finally going to see rates trending down. But what's the realistic thing to expect? According to the latest forecast, rates aren't expected to fall dramatically anytime soon. Most experts project they'll stay somewhere in the mid-low to 6% range through 2026. In other words, no big changes are expected, but small shifts like the one we just saw are still likely. And each time there's economic change, in the news or whatever, there's a chance mortgage rates will react. And with so many reports coming out, we'll get a better feeling of where the economy and inflation are headed and how rates will respond. So what rate would get buyers moving again? The magic number buyers seem to be watching for is 6%. And it's not just a psychological benchmark, it really does have real impact. A recent report from the National Association of Realtors says if rates were 6.5%, 5.5 million more households could afford the median home price, and roughly 550,000 people would be able to buy a home within 12 to 18 months. That's a lot of pent-up demand just waiting for the green light. And if you look back at graphs, you'll see Fannie Mae thinks we'll hit that threshold next year. That raises an important question. Does it really make sense to wait for lower rates? Because here's the trade-off. If you're waiting for 6%, you need to realize a lot of other people are too. And when rates do continue to inch down and more buyers jump into the market all at once, you could face more competition, fewer choices, and higher home prices. The National Association of Realtors explains it like this. Home buyers wishing for lower mortgage interest rates may eventually get their wish, but for now, they'll have to decide whether it's better to wait to jump into a market or consider the unique window that exists right now. Inventory being up, which is more choices, price growth has slowed down, which with more realistic pricing, and you may have more room to negotiate. You can get a better deal. These are all opportunities that will go away if rates fall and demand surges. That's why the National Association of Realtors says buyers who are holding off for lower mortgage rates may be missing a key opening in the market. So the bottom line, rates are expected to hit 6% this year, but when they do, you'll have to deal with more competition as other buyers jump back in. If you want less pressure and more negotiating power, that opportunity is already here, and it might not last for long. It all depends on what happens in the economy, what's happening in the economy next. So let's talk about what's happening in our area and whether it makes sense to make your move now or before everyone else does.